Hey guys, welcome back to Hey guys, welcome back to our YouTube channel Accounts Guru Cool. Learn accounting online. So today we are here with one more content, and in this we are going to discuss about record to report walkthrough with corporate 50 terminology related to record to report. We have one comment from one of our members and he asked us to create a content on this. So considering we are here to discuss more on what sort of terminology used in corporate sector related to record to report, and this is going to be the one of the important one to all of our viewers to know that what sort of terms used in corporate sectors related to record to report. So considering that, request all the viewers to be a part of our membership to get an exclusive benefits from there. And in addition to that, if you guys are looking for any sort of training related to accounting and finance, either that's going to be your P2P, O2C, or R2R plus FVNA or any software training. So you can connect with us on our email ID accounts.gurukul@yahoo.com for exclusive hands-on training that drives results. So we are here going to jump towards that to know what sort of 50 terminology we have to discuss on that, and that's used in corporate sector. R2R, we know that is a finance and accounting process that involves the collections, processing, and reporting of financial data. Corporate jargon related to R2R often includes the following terms. So, what sort of terminology used in corporate sectors related to R2R? That's we are going to discuss here. First, there's a close cycle. So we are going to use the terms what used in R2R in corporate sectors, and quickly we are going to discuss in a few sentences or sentence about the meaning of that. Closed cycle, what is mean by that? It refers to the period in which financial records are closed for a reporting period, typically monthly or quarterly. That's a closed cycle. So in corporate sectors, most of the times they use the word what's a close cycle for this month for our organization. Either it's a monthly, quarterly, half yearly, yearly, or when we are starting our close cycle. So that's the terms used related to your closing the books of account. Next is towards the GL, a complete record of all financial transactions within an organization. So GL terms is used for a complete record of all financial transactions within an organizations. Next, reconciliation, the process of ensuring that financial transactions are consistent and match the records from various sources. Example, bank accounts, accounts payable, receivable. So mostly they use the term says that close cycle, GL, reconciliations. But what is mean by that word? So we are discussing on that. Next is towards financial reporting. Hey, when we are able to see the financial reporting, what's the status of financial reporting? So what is mean by financial reporting? The preparation and dissemination of financial statements such as the balance sheet, income statement, and cash flow statement that consist of financial reporting. Next is towards variance analysis. What's the status of variance analysis? When we can sit to see for that? And have you identified the reasons for that for the major variance analysis? So this variance analysis means what? A process used to analyze the differences between actual financial results and budgeted or forecasted figures. Next is towards journal entry. Entries made in the general ledger to record financial transactions. That's the general entries. How many J's posted? How many J's is pending to post? What's the highest amount of JE we posted for this month? So that's the journal entry. Next is towards month end, quarter end, or year end close. Specific periods where financial data is finalized and reports are produced. Can you provide the month end report? Can you share the last quarter end report? Can you send us the can you send me the previous financial year end close? So that's the word is used for specific periods where financial data is finalized and reports are produced. Next is accruals. Accounting adjustment made for revenues and expenses that have been incurred but not yet recorded. What's the status of accruals? Can you provide the schedules for that? Have you accrued the income? Have you accrued the expenses? So this accrual systems is used for all these things. Second, automations. The use of technology to streamline the R2R process, often through software solutions that increase efficiency and accuracy. So this automation word is used towards that. Are you able to do the automation for this? If this is a recurring one, can we automate the reversal of our journal entry? What's the status of that automations? So that's the word is going to use towards the automations. Next is intercompany reconciliations. The process of reconciling financial transactions between subsidiaries or divisions of the same entity. That's the intercompany reconciliations. Have you done the intercompany reconciliations? Is there any open recon items on which we have to discuss? Can you show me that? So that's the intercompany reconciliations. Next is consolidations. Combining financial statements from multiple subsidiaries or divisions to create a unified report for the parent company. Consolidations. This is one of the important concepts towards the corporate sectors. We need the consolidated report. Have you eliminated the transactions? When we are going to see the consolidated report, so that's the consolidation is going to be. Next is towards that financial control framework, a set of policies and procedures designed to ensure accurate financial reporting and compliance with regulations. So financial control framework. These are all the some policies designed through the corporate. We have to follow that. The holding entity used to design the set of policies that we have to follow. Internal controls, process and procedures implemented within R2R to prevent errors, fraud, and ensure compliance with accounting standards. Have you guys followed the internal controls? Is this is added in our internal controls? So that's the word is going to used. Next, compliance reporting. Generating reports to ensure that company is adhering to regulatory requirements. Example, tax filings, GAAP, IFRS compliances. This is compliance reporting. Next is end-to-end process. Refers to the comprehensive handling of all activities in the R2R cycle from transaction initiation to finalization of reporting. That's the end-to-end process of R2R. Next is towards data integrity, ensuring that financial data is accurate, consistent, and reliable. Have you ensured the data integrity? That's the question is going to be. So what's the mean by that? Next is ERP system, enterprise resource planning, software used to automate and integrate R2R process within an organization, helping with tasks like ledger management, reporting, and compliance. That's the ERP. Which ERP you hands on? Oracle, SAP, that's going to be the word. Financial close management, a set of activities aimed to ensuring the timely and accurate completion of the financial close process. That's a financial close management. Next, month-end reporting pack, a collection of financial reports produced at the end of the month, often including P&L, balance sheet, and cash flow statement. That's going to be used month-end reporting pack. Can you provide the month-end reporting pack? When we can see the month-end reporting pack? So that's going to be the combination of your financial reports consisting P&L, balance sheet, and cash flow. Next is towards budget to actual B2A. A comparison of the budgeted financial results against the actual financial results, often part of the variance analysis. So it's a variance analysis or B2A. That's a corporate terminology. Use the different MNCs for all these things. So B2A means budget to actual. SL, a detailed ledger that contains data from specific areas like accounts payable, accounts receivable, or inventory, which feeds into the GL. That's a SL. So what's the status of SLGL recon? So SL means subledger. Next is trial balance. We know very well of this. A report that lists the balances of all general ledger accounts at a particular point in time used to check the accuracy of journal entries. Next is transaction matching. The process of matching transaction records across different systems or accounts to ensure consistency and accuracy. That's going to be the meaning of transaction matching. Next is towards profitability analysis. The process of evaluating the financial performance of various business segment or product lines to determine their profitability. So, profitability analysis. When we are presenting the reports, we have to do the profitability analysis because management is too much interested to know more on that. Have you done the profitability analysis? Is there any major issues over there? So that's the term is used. Segment reporting or someone reporting financial informations for different segment or business units of the company, which is typically required for compliance with accounting standards like IFRS or GAAP. If you have the multiple segment, then doing this segment reporting is going to added benefits. It's a segment reporting means if you have the multiple line of business, so for each and every business, we have to prepare for that P&L and to see how that's look like. That's a segment reporting within the one organizations. If you are doing the business into multiple segment, then this reporting is important one. Post close adjustments. Adjustments made to the financial records after the close process is finished, typically for any errors or overlooked transactions. That's a post-close adjustments. Next is roll forward. The process of updating financial data from the previous period to reflect the current period, particularly in relation to assets and liabilities. That's a roll forward. We have to do the roll forward of balances. That's the word. Tax provisions. The accounting estimate of a company's tax liability for a specific period which is recorded in the financial statements. That's the tax provisions. Fixed assets accounting. The process of managing the accounting for a company's physical assets, including depreciations and amortizations. That's a fixed asset accounting. Book to bill, the ratio of sales order bookings to revenue recognized billings, often used in performance analysis of businesses that rely on contracts and project based work. That's a book to bill. Next is towards cash flow forecasting, predicting future cash inflow and outflow to ensure liquidity and effective cash management during the financial close. That's a cash flow forecasting. Year-end reporting, the process of generating and filing the full set of financial reports at the end of the fiscal year, often including audit support and regulatory filings. That's a year-end reporting. Audit trail, a detailed record of all transactions and modifications within the accounting system, often required for transparency and compliance. This is going to be the audit trail. Can you provide the audit trail of the transactions? That's going to be the use audit trail. Next is financial statement consolidations. The process of combining financial statements from subsidiaries or divisions to form a group level financial statement. That's a consolidations. Interim financial reporting. Financial reports generated on a semi-annual or quarterly basis as opposed to the full year in report. Interim financial reporting, either quarterly, half yearly, or on any specific period. Deferred revenue, money received by the company for goods or services not yet delivered or performed, which is recorded as liability until on. That's meaning of deferred revenue. Accounting period, a specific period of a time for which financial transactions are recorded, often monthly, quarterly, or annually. That's the meaning of your accounting period. Next is towards compliance calendar, a schedule of all compliance related reporting deadlines and requirements to ensure that the company meets all regulatory and financial reporting standards. That's a compliance calendar, which compliance is going to be the due on which date. Variance report, A detailed analysis of the differences between actual and budgeted financial performance, typically for revenue and expenses. Cost center, an organizational unit within the company that does not directly generate profit but incurs cost, often tracked and reported during the R2R process. This is related to your logistic department cost center, your HR cost center, admin cost center, finance cost center. For each and every departmental wise, we need to track how much is a expense is spending on which department. For that, this cost center is used. KPIs, key performance indicator, metrics used to evaluate the performance of specific financial and operational aspects of the business, often incorporated into financial reporting. That's a key performance indicator. Next is towards reporting suite, a set of reports, dashboards, or template used for preparing and distributing financial statements, management reports, and performance analysis. That's a reporting suite. Multi-currency consolidations, the process of and converting financials data from multiple currencies into the company's reporting currency for consolidated financial statement. For consolidations, we have to present the report in our holding entity's currency. So if you are following, you are in different currency in subsidiary, then we have to convert that numbers into holding country's currency. Adjustment entries. Entries made to correct errors or reflect change in accounting estimates, often required during the close process. That's the adjustment entries. If it's need to do post closure, if any adjustment entry. Profit and loss, that's a P&L statement. A financial report summarize the revenues, cost, and expenses incurred during a specific period, which is key to R2R. So P&L statement. Next is towards segmental reporting, the practice of preparing financial statements for different segments or divisions within organizations, often for transparency and compliances with accounting standards. Account reconciliation tool, automated tool or software used to assist in the process of recording accounts by comparing records from different sources. That's an account reconciliation tool. Balance sheet reconciliations, the process of reconciling discrepancies between the company's general ledger and its balance sheet accounts. That's a balance sheet reconciliation. Next is towards financial close dashboard, a visual tool used to track the progress of the financial close process, showing tasks completed and pending. That's going to be the financial close dashboard. Pre-close checklist, a list of tasks and activities to be completed prior to the official close period to ensure readiness for the financial close. The term is used pre-close checklist. So these terms enhance understanding of the complexity and depth of the record to report process as organizations aim to streamline and maintain accuracy in their financial reporting. So now we have discussed here in short with corporate 50 terminology related to record to report. So thanks guys for being with us, and thanks for asking in the comment to create something which is important to all of our members. So request all the members to start to ask us to create a content as per your requirement, and we are going to come up with that as per the LIFO basis. You can say last in first out, says that if someone asks the four, then out of that four, one is going to be, and the second for response we have to provide to the another member. So that's the way at least it's going to be how the justification to all the members. So thanks guys for being with us, and request all the members to like, share, and be with us to get a more insight about accounting and finance. Thank you.